Hi, Josephine. This is Lara, and I'm just getting back to you with your concerns that you have over your taxes for this current year. Your taxes are currently due on April 18th, so we do not have to rush anything or any of this. I will personally take care of your e-filing because that's how it is just so much easier to do. So once we go over this, I will fax you your all of this paperwork, and all you have to do is sign the second sheet of the 1040 right here. Oh, that is not it. So sorry. Right here. And then you can just fax it back to me, and then we'll double check all the paperwork, and then I'll send it in. So as I said again, your taxes are due April 18th, and fortunately this year you don't have to pay anything on time. Don't have to pay anything for this year because you have a refund. But if in case we do cross that you do have to pay something in the future or in any future year, there is an app called IRS to go, and you can have it on your mobile phone, and so then you can pay your taxes that way at any time as long as it's before the deadline of that current year. As I said again, you don't have to pay taxes this year. You currently have a refund of $50,331. So as we continue on to this, I know that you have some concerns with Schedule A. With Schedule A, Line 1, your medical expenses, we included the $1,400 that you got reimbursed with your company, and we added it back with Pacey's expenses that he has given us. So in total of that, it included to be a grand total of $17,526. Not a big concern on that one. With the second one, we did your state and local taxes on line 5 of Schedule A as $6,995. With that, we added the estimated tax payments that you paid in the current year, which included that one of $750 and 3 payments of $700. And then we added in the state withheld with your W-2, which that is for that concern. For your Schedule C depreciation, and I know that can seem a little bit funky, but with tax depreciation, you can actually accelerate faster for tax purposes than you can for book. Reason being is that for Section 179, you can actually accelerate tangible personal property faster and deduct it up to $500,000. And since you did have personal tangible asset, we took that amount and added it into the depreciation schedule rates that tax purposes use. So therefore making it lower for your income, making it lower for your tax bracket. Also, 179 will allow us to only use this for taxes purchased in the current year. So that's why we only took it on the assets that you bought in this current year. I'm so sorry for getting tongue-tied and everything. It's just a little hectic up in this office because we're doing a lot of tax returns. However, with your tax return, with on Schedule C with meals, unfortunately the IRS only allows to take up to 50% of all meals, even if they're 100% included in business expenses. So that's why the $10,000 is now shown only as $5,000. Unfortunately, I can't do anything about that. It's just how the taxes are. Also, the additional income is not added into the income because it is not directly related to the business because it is from your second home. So we put that on Schedule E, and that's where you can find the number and all the expenses related to it. So with this, if you have a lower Schedule C, it'll bring down your Schedule SE, which then includes you could possibly have no self-employment tax, which is great because that just would add on taxes that you would have to pay to the IRS, and we don't want that. So currently, right now, you're in the 25% marginal tax bracket because your AGI is 141,500, and so that is where your marginal tax bracket shall lie. Other concerns and questions that I have with this, and also some questions that you have also asked me, is that do you think you will owe the same amount of money for the next year? And I say possibly not, and most likely not, because there's too many factors involved with this, such as your W-2, the ICE house, rental income, interest income, and dividend income. All these incomes can fluctuate between year and year, as we both know from 2014 to 2015. You definitely can fluctuate immensely. So I recommend that we just don't do anything for right now, because you can have a refund possibly next year too. And with this income, you can possibly not qualify or qualify for education expenses, depending on how much money you made in that current year. However, my questions and concerns are a little bit shaky on this with your tax return. One concern I do have is that I recommend you changing the income statement that you and Pacey have provided for me for the ICE house. The reason being is that with your company, you do own a sole proprietorship, and you do have some misrepresentation reporting errors with the additional income, very non-discrete. However, with this fraud, we are actually misreporting the estimated tax payments for 2015 on line 65 on your 1040s, because it's 15% of your book income, and since it's reported wrong, that's considered fraud. And with a sole proprietorship, the IRS does have the right to come after your personal assets. So that's one recommendation I consider. It's not anything scary, and remember, we're ahead of schedule, so we do not have to be super uber concerned, but I definitely would fix that, and we'll fix it. And with this, it will only reduce your refund by a couple $1,000s, so you will earn $48,141 instead of the $50,331. Not a big deal at all, again, but we do not want the IRS coming after your all's personal assets. So that's just something to take note of. Get back to me if you have any questions. It's okay. Secondly, if you and Pacey decide that you will take more tangible personal property assets for the ICE house, I recommend leasing out the old building to the tenant who currently is renting it from you, or at least persuade them into it. Doing this will actually decrease the depreciation expense, increasing the income that you will earn for that current year. And if you buy more tangible personal property assets in that year, we can definitely take more depreciation expense, and therefore reducing your income even more. So this is just something, if you're doing, not a huge concern, just something for tax purposes, less taxes to pay. Just a thought. Thirdly, my question is, how much do you think the ICE house will actually increase in the coming year? Reason being is that new laws and new regulations have been put in for businesses, and the health insurance is required for businesses that have 30 or more full employees that work 30 plus hours. And I realize that you and Pacey have told me that all your employees only work part-time. However, if you do go over the 30 employees, and they do start working more and more and up to 30 hours, you are subject to pay and provide health insurance for your employees. And if you do not, the penalty is about $167 per month per person over 30 people. So if you have 31 people working for you, you would only pay $167 per month in that current year, as long as they're working for. These are just some questions and concerns that I do have with your tax return. Again, you do not have to rush back and follow up with me, but email me, call my office, anything that could possibly be misinterpreted or have any questions or concerns about with your tax return, just let me know and get back to me as soon as possible. Thanks, and have a great day.